Well, I would say that 90% of the Trump speech last night should be acceptable to those of us who are in the middle of the road or to the right in the political spectrum. Unfortunately, for those of us in the Tesla fan club, we had to cringe with the things that he still gets wrong on electric cars and electrification. Electrification, did I say that right? Yeah. The good news is that the speech showed movement towards our position, as pointed out by Forbes this morning, compared to where Trump was a few years ago. I'm betting that Elon will continue to persuade him to become even more favorable in the future. That would be my bet. And that's, of course, I've spent a lot of time this week talking about that bet that Elon has made. His most strident, I mean, Trump's most strident statement on the night was that on the day one, he is going to completely eliminate any kind of mandates with regard to electric vehicles going forward. By the way, I hate mandates. I hate all mandates. Let the market do its thing. I'm perfectly okay with the elimination of the mandates. Now, there's a separate kind of thing going on, which would be bully pulpiting and, talking about the benefits of some one thing over another thing. I think that's perfectly fine. But mandates, requirements, not so good. That's for socialist countries where the top believes that they can manage the economy, the micro or even the macro portions of the economy that involve which goods and services get made. No, that's not an American, that's not a capitalistic notion. On the other hand, there can be little doubt that governments around the world have helped the electrification process in many, many ways. They've propped it up when it wasn't the lowest cost solution, in particular with regard to solar and batteries, wind, etc. So I've had knockdown, drag out fights with conservative friends over this issue. My position is that there might be times, I'm a pragmatist, there might be times when a promising technology can't get enough backing to breathe, and there could be reasons for the government to put its finger on the scale a little bit for a short time. Not many of my most conservative friends would not agree with me at all. They want to be, straight up and down with regard to letting the markets work. Let me know what you think about that. Sawyer Merritt says this morning, he says, listen, Harmony Energy has begun construction on France's biggest battery storage facility ever, and they're using Tesla Megapacks. That should be good news this morning. That should be moving the stock. Well, probably not. Zarati says this morning, Citi boosted its outlook for Tesla from 182 to 274, stating that AI and subsequent automotive developments will need to justify the uptick. Citi analysts said the increase in stock price won't come from core EV fundamentals, but instead from the execution of its future products. The quarter two delivery beat was also encouraging, which prompts increased estimates and supports Citi's underlying call for improving EV sentiment this summer. However, the firm believes core EV fundamentals alone are unlikely to support significant further upside from here in Tesla shares, absent new product and AI catalysts. Absent new product? They got lots of new product coming, folks. Okay, this is from Mizuho. Mizuho held its neutral rating, but increased its price target on Tesla shares from 180 to 230. It also is not relying on EV fundamentals to see this growth, but instead stating AI, especially robotaxi, and Optimus will be the major factors in an increase in valuation. Analysts of the firm said that these catalysts could be more difficult to obtain, but could be significant factors for an increase in price. So as far as I can see, there's no obvious reason for Tesla to be headed down this morning, but it is down. The only negative news I could find was Barron's report on Tesla sales being down in California, but up for the rest of the United States. By the way, if you haven't been in California recently, like every other car is a Tesla. So it might be a temporary thing, or it might be that people are just like everybody that wants a Tesla has one. But we'll see what happens with that. But noting that Tesla sales are up, pretty good in the rest of the United States, this is what I've been hoping for. I've been looking for this shift where the rest of the U.S. starts to get it with regard to not just generally electric cars, but also with regard to Tesla. So let me know in the comments if you see other pressure points that might be at work today. There are some technical analysts suggesting that we need to test 225, but that would be surprising during a run-up to the earnings, don't you think? Anyway, let me know. I'm interested to hear what you have to say about all of this. This is Randy Kirk. This morning, I haven't a clue as what I'm going to do for you later this morning. I've got, well, okay, I got a couple of ideas, but what I do know is that Larry Goldberg will be joining me tonight. I know that tomorrow morning we were going to have Brighter with Herbert Ong. Herbert will be joining me later today. We'll do the video, and then tomorrow morning we'll have Herbert Ong joining me. I think there's a chance that it might be Brian Wang this morning, but we haven't made that decision yet. Okay, and then what else do we need to know? We need to know that it'd be great if you'd like and subscribe and notify, and then hopefully join Patreon. And thank you for so many who have joined Patreon already this month. It's been great. Okay, the VIX is strongly up again this morning. Lots of volatility. And I say there is little to explain this volatility other than portfolio adjusting, but there's a lot of volatility today. Things are a bit extended, as I've been saying, in many ways. Gold is extended, silver is extended, all of the equity markets are extended. Markets may be just trying to figure out how to position themselves for an uncertain future with an election that's going to, probably result in a change of administration. So that could be what's happening with the VIX right now. It's really hard to say, but it has jumped up from it was sitting in the 11s. Now it's up in the, I think the 16s this morning. So, quite high on that fear index. I'm going to do something a little different this morning. I don't know if you know that I know a lot about import-export. All right. I want to talk about import-export this morning. I want to talk about tariffs. I want to talk about dollar. I want to talk about all that kind of thing. Many of you know, maybe you don't really know this. I have been doing import-export since 1972, 100% of the time. I mean, from 1972 until today, I've been doing import-export. I have exported from Europe, from Asia, from Africa, from Israel, from South America, from Canada. I have imported from Asia and Europe. A substantial portion of my income, my entire life, has depended on import and export. With that background in mind, I would like to just give a short primer to help those of you who are not expert in this area, who know a little bit about tariffs, know a little bit about the dollar and problems with regard to the value of the dollar, overseas. But it appears this is going to be a major part of the next administration's policies with regard to the economy. And so I think it'd be good this is be a short primer. First of all, export represents about 10% of U.S. GDP. So it ain't nothing. And it ranges recently from about 10 to 12% of GDP. Imports are 13 to 18% in most of the recent years. And it's a major big deal. And of course, you'll notice that there's that difference between import and exports. The imports have been winning out over the years, and that would tend to be true for a wealthy nation. But most people think it's not a great idea to have the import-export difference be that great, because what does it do? It ends up exporting dollars to other countries who end up having some advantages vis-a-vis the United States as they build up those dollar reserves. Imports are generally a good thing for wealth, okay, for the wealth of a nation, because you're buying things at a discount compared to what you could buy them for if they're made domestically. So those who buy imports end up becoming wealthier as a result of taking advantage of other countries' ability to do it cheaper. And it can be cheaper because, of course, labor, because of raw materials, et cetera. On the other hand, imports can cut into U.S. production of goods and services and thereby cost jobs or revenues for competing companies that are trying to do that same kind of business in the United States. You've seen this a million times with steel, with automobiles, et cetera. And of course, with the automobile business, we see it all the time. Now, exports are good in that they provide jobs and earnings for domestic companies. On the other hand, we're exporting our raw materials and labor. And if either or both of those are in short supply, it can have a negative impact on the United States or on the country that's doing the exporting. And this is where people talk about major wealthier companies over the years going and exploiting companies by exploiting their cheap labor or exploiting their minerals and their natural resources. Exploitation for what might look like exploitation to one person might be dinner for somebody else in another country where they wouldn't be able to afford dinner if it weren't for the exploiting company coming in and doing business with them. In general, most economies would rather have a lot of exports and limited imports. The richer the country, generally, the more they're going to take advantage of buying things at bargain prices. So it's going to be the flip of that with more imports than exports. In a perfect world, the countries who are best at something would export their excess to countries that are not as good, and everybody would win. And that's the idea of globalization. Of course, it's just never going to work out that way because there are three things that stand in the way of that perfect situation. Number one, tariffs. So countries put in tariffs to protect their local companies and workers. If there are strategic reasons, or sometimes they're just domestic political reasons, or there are companies that are too big to fail, then countries will come in and they'll put tariffs on in general, or they put tariffs on particular industries or particular kinds of products that they're trying to protect in country. And so that changes the way that the pricing advantage for these companies are trying to export into your country, into our country in this particular case. Government subsidies, number two, also give an unfair advantage to local companies or employees. And once again, government subsidies will come in for all the above reasons. It might be, as we've seen, you're trying to motivate companies in the country to get involved in a business that you think is strategic or that you otherwise want to promote. Or you might give some of these subsidies because of political reasons or because of, all those things, okay? So these subsidies then give companies advantages or countries advantages with regard to the international trade. And of course, then there's the difference in the value of currencies. As if the dollar is strong, it makes exports more expensive and imports cheap. It means that I just went up and had meals in Canada and stayed in lodging in Canada that was a lot less expensive than I expected to be because I had a strong dollar. Of course, when the dollar is weak, it makes exports cheaper and imports more expensive. And it means that when a few years ago you went to Paris, you would go, oh my gosh, it's so expensive here. But today it's less expensive. Tariffs and subsidies, I think those were self-explanatory in terms of their impact. Here is where the nuances start to happen. Let's say I'm buying a widget from Turkey. I'm going to use Turkey because nobody cares. I'm not going to use China or Russia. Anyway, I'm going to buy a widget from Turkey for $1. The U.S. imposes a tariff of 10%. As the importer, I'm now paying $1.10. And if everything else remains the same, I'm going to want to charge at least 10 cents more to the customer. Probably I'm going to want to mark up that 10 cents with using my normal margins. So maybe I'm going to mark it up. Maybe that 10 cents might become 15 or 20 cents. So in that sense, the U.S. consumer is paying the price of the tariff. And this is what has been argued now for a while by someone, in particular on the left today. It's not always true. This argument goes back and forth depending on who's in power. But sometimes a tariff is going to be paid for by the U.S. consumer. In fact, however, it never works that way. As soon as a tariff is imposed, the importers put pressure on the entire supply chain to find a way to mitigate the tariff, including decreasing the profit margins of all concerned. And then the importer also might modify their margins in order to keep their competitive advantage. The suppliers don't want to lose the business. The importers don't want to lose the business. So they all try to find a way to get around the tariff in terms of the competitive situation. I've been in that position many, many times over the last, whatever that was, 50 or 60 years. Okay, but the same is also true with efforts to devalue a currency to help local companies by making the price of things in dollars cost more. The same thing happens with dollar devaluation. You also get the advantage of exports becoming cheaper, helping exporters. But as you might imagine, importing countries and companies also react by trying to mitigate any losses they might be facing. This can also include the importing country trying to devalue their currency in response, and also going to using tariffs to protect their local industry. So it's a huge battle that involves all of these elements. So anyway, that's a short primer on import, export, and the impacts. While the intentions of these actions to protect local business might be in place, there can be unintended or even expected consequences, but the expected consequences don't necessarily stop people from doing things like tariffs and trying to devalue currencies or prop up industries using subsidies. So let me know what you think about all that. If there's anything that I missed or anything that I should have talked about that I didn't, or if you're still confused and I didn't do a good job of explaining it. This is from Market Watch this morning. Strategists led by Michael Hartnett advise investors be bullish towards bonds, bullion, and breadth. I thought that was clever. Bonds, bullion, and breadth. The latter of which includes distressed value sectors like real estate investment trusts and distressed growth sectors like biotech and Tesla. They didn't say Tesla. Okay, so the bond market knows the Fed is cutting rates, U.S. voters are angry about inflation, and that the labor market is weakening, says Hartnett and team. So proposed import tariffs might also be deflationary rather than inflationary, and bonds might hedge unanticipated second half volatility as well as a harder landing for the economy. So in other words, if rates come down, bonds will go up. So this is a category where people probably should be investing right now. You can grab, this is not investment advice, but this is how it works. You get the combination of grabbing high interest rates right now and also getting a pretty good chance of improving value of the underlying asset, the bond, as interest rates come down. It's a very good move for those who, in particular, who like to have a more secure asset that they're holding. New tariffs threaten a weak economy. I'm sorry. New tariffs will threaten a weak global economy with recession, they say. They add that a 2020s trade war would be about technology, so not as U.S. dollar positive as the consensus believes. As the strategists have been advising for some time, they're saying the first Fed interest rate cut should be sold using traditional buy the rumor, sell the news tactics. Over the last week, gold saw the largest fund inflow since March of 2022. High-yield bonds saw the largest inflow since November 23, and financials, the largest inflow since November 23. Also, bonds saw the largest inflows ever and the biggest since October 2020, Bank of America said. So there as you go. Bonds, bullion, and what was it? Bonds, bullion, and I forgot it already. Bonds, bullion, yeah, I lost it. Well, it was clever, but I couldn't remember it. Okay, as you know, Tesla, however, would continue to be the best of all worlds, not investment advice, but it is a growth stock with the best balance sheet you could ever hope for, solid profits, free cash flow, and they're investing in the products and services of the future like no other company. And right now, it's still definitely out of favor. Anyway, so that's why I recommend in my portfolio, that's 90% of my portfolio. I certainly think that there's a good future in Tesla stock, but it is not investment advice. That's just Randy's analysis. All right, let's take a look at where the market is right now. We have Tesla this morning, however, not being a very good investment. It is down $7.35 to 241.88. We have the Dow Jones dropping another 291, continuing to move towards my expectation of a 10% back. We're just going to have to get back 10% across the board on equities. This is no longer, you can no longer look at this as rotation. This is definitely a sell-off. NASDAQ down 55 this morning, S&P down 15. We've got the Magnificent Seven mixed this morning with 3 up and 4 down. You've got NVIDIA down $1.87, Microsoft 2, Meta's up 10, recovering from the massive drop that it had the other day. Microsoft might be down a little bit this morning because of this big problem they had overnight with the outage across the world, which was kind of wild. And you've got the Cathie Woods down again. Cathie Woods are just being slammed. At some point, there's a buying opportunity here. I haven't studied it yet, so I'm not saying that this is the point, but they've really been slammed recently. I probably need to take a little harder look over there at what might be the turnaround point on those stocks. Okay, so percentage-wise, we've got the Dow down 0.73, NASDAQ down 0.22, S&P down 0.24, and Tesla this morning, for no reason that I can figure out, down 2.88%. Okay, let's go ahead and look at the bonds. The bonds were up this morning earlier. Let's see if they still are. Yes, they're up 4 basis points, and that's on the 10-year. And we have got the 2-year also roughly 4 basis points. We've got the 2-month 3 basis points. The difference between the 10-year and the 2-year this morning, 498, 423, right around that 27 basis points, still holding in that area. And the 2-month obviously would also be over 110 as it has been recently. Okay, let's go ahead and take a look at the oils. Oil was heading down this morning, but still, 82.37 on Texas Intermediate, but it's down 45 cents. Brent continuing to only be less than $3. This is so interesting. But at 84.62, natural gas down 2% this morning at $2.08. Again, heading towards dropping below $2, which I think is surprising. So we must have an oversupply of natural gas. I'll try to remember to look into that later today. We have gold selling off after blowing up all week, hitting all-time highs, but right now down 52 or 2% at 2,403. Silver also down almost 3%, below $30 now at 29.36. We have copper down 0.5% at 4.259, it's continuing to be in the middle of the range recently. The dollar is down now against the Japanese yen and the euro. And they're saying except for a weekly gain, but that's certainly not anything I'm seeing here. I'm seeing only red. We've got Bitcoin up almost 2,000 this morning to 65,489. So moving back into a higher, the higher part of the recent range for crypto, for Bitcoin. Okay, so that is where things are this morning. Let's take one more look at Tesla. Continuing 765, no real change since we looked a minute ago. Let me just invite you. I think there's a good chance I'm going to give Brian Wang a call. I think he might be a good guy to have on this morning, but we'll see. If not, I will find something absolutely fun for midday today. And then Larry Goldberg, for sure, he'll be on tonight. Sometime this weekend, I'm going to be sitting down with Larry. I think it'll be on Saturday. Maybe this will be the Sunday show, and I'm going to sit down with Larry, and we're going to do a long-form interview with Larry and take a look at his entire history. I know it's fascinating. I know enough about it to know already that it's going to be super interesting to follow Larry from South Africa to Europe, and in particular London, to Israel, to Canada, I think to Canada at one point, to the United States. Anyway, we'll get the whole story, but maybe that'll be the Sunday show in the morning. Anyway, that's all I got for you right now. It is always great talking to you, and it was this morning.